And the International Monetary Fund has warned that the number one threat to Indonesia's economy is the risk of spikes in financial volatility. Well, we've seen a lot of that lately. Bloomberg's global policy and economics editor Kathleen asked the IMF's mission chief just how resilient Indonesia is to market turbulence.
Well, what's happening now is not really new. We've had episodes of financial turbulence in the last 2 years after the U.S. elections, when China changed its exchange rate regime, after the taper tantrum. And so this is not something that is new. And Indonesia has in the past done very well in facing these challenges.
The Institute for International Finance put out a report just in the last couple of days talking about the biggest slump in portfolio flows out of emerging markets since the 2016 presidential election. They're tracking registered nearly $4 billion in outflows since flows turned negative on January 30th. Indonesia is not one of the countries they mentioned that is most affected by this, but does this make this concern? Does it make this risk, even though Indonesia has dealt well with it in the past, something that you're monitoring and you expect the government to monitor as well?
Of course, it is something that needs to be monitored closely, and the authorities need to remain vigilant because things can change very quickly. Now, on a more structural dimension, when we meet with foreign investors, and we do that frequently, asset managers or large pension funds and other institutions, the impression we get is that non-resident investors have discovered Indonesia in recent years, especially after the global financial crisis, and they are seeking more exposure to the country. Obviously, this is not something that is consistent. There are episodes of volatility, but overall, Indonesia has become an attractive place for foreign investors, mainly to the government bond market and also to equities. But we don't expect a large reversal that is sustained, but obviously the road can be bumpy.